SpaceX went public a month ago in the biggest IPO ever. It's now trading below its offer price, and the round trip tells us a lot about index plumbing. SpaceX priced at $135 and raised nearly $86 billion, surpassing Aramco's 2019 record. It opened at $150, ran up more than 40% over its first two sessions, briefly trading above Amazon and Microsoft by market cap before a 16% single session reversal. Within a month, the stock broke below its IPO price, days after being included in the NASDAQ 100 index, and is still making new lows. Why? First, a weighting cap. Less than 5% of SpaceX shares trade publicly, and NASDAQ limits how much of a low-float company like that can count toward the index. So a $2 trillion company entered at roughly a 1.3% weight. The forced bid was real, but pretty small relative to the headline market cap. Second, index inclusion is known and often gets front-run and sold into. NASDAQ made changes to its index eligibility rules that allowed large offerings to join the NASDAQ 100 after just 15 trading days, a rule SpaceX became the first company to use, joining on July 7th. On paper, this meant over 200 products tracking roughly $800 billion were obligated to buy SpaceX, but other investors anticipated this and were ready to sell when index funds started buying. Third, the supply side is likely about to swamp the demand side. The lockup expires August 6th, 2 days after SpaceX's first earnings report, releasing over 900 million shares into a float that's a fraction of that size. That's not great for any stock price. A lot of things didn't change. The S&P held its rules, it rejected a proposal to fast-track megacaps in June, so SpaceX still needs a year of trading history and a track record of GAAP profitability for S&P 500 inclusion. SpaceX lost over $4 billion in Q1 of this year, so that looks a long way off. The other companies looking to IPO, like Anthropic, are looking at enormous valuations. SpaceX, Anthropic, and OpenAI are a combined pipeline of over $3.5 trillion, larger than the market cap of every company that went public in 2021. Anthropic and OpenAI are working with Goldman Sachs and Morgan Stanley, which means the same banks are allocating institutional demand across competing trillion-dollar deals. It's not a good look that SpaceX round-tripped and then some in its first month, and it's likely to shape how aggressively Anthropic and OpenAI can price their IPOs. For years, AI risk lived on private balance sheets, and venture funds and sovereign wealth funds. The test of this year's IPO wave is whether public investors, which means all of us, will agree to the price that private markets set for AI.